Welcome to the video training program on how to make safe and consistent income from the financial market. Now, area of focus for these training programs are why people lose money in the financial market and how to guide against loss of funds in the financial market, how to grow your wealth exponentially by compound interest, how to utilize the expertise of professional traders to earn while you learn, how to make 1, 2, 5, 20 or more dollars daily from the financial market, practical steps to take today to start earning from the financial market. Having said that, let's begin with reasons why people lose money in the financial market and steps you can take to ensure that you guard against losses in the financial market. Once again, welcome to this video training program, and then let's get right into the training. Here we're looking at the financial market, various instruments, and many who have experiences of capital losses, or they know people who or someone who have had experience of capital loss. I'll run you through in this episode on the reason why people have challenges when they get into the financial market business wrongly. I should be looking at about 3 or 4 reasons why people have issues with that. Say whether it's forex, it's crypto, it's gold, or whatever instruments, stock trading, whatever that they're getting involved in. Why that will have challenge? Of course, very quickly. I know most of you are already thinking about the various investment companies that had serious challenges in 2020 and then partly in 2021. Now, one of the reasons why people have challenges, even those who traded by themselves, they still had challenges. Okay, the first reason why people have challenge in the financial market is trying to get rich quick. Yes, there are opportunities, there's large opportunity to get rich in the financial market, but if you try to over squeeze the market, there's also a place of the market reacting and then making you lose money. What do I mean by that? When people try to get rich, they tell themselves, okay, I have this $100, I want to convert, I want to make it $1,000 in 1 week or 1 month. It is possible. Yes, I must tell you, it is possible. You can get on a trade with $100 and then take a very large leverage, and then in no time it turns out to $1,000. Even in one day, it's possible. But just like it's also possible to achieve that in one day, if you trade wrongly, you can also lose that in one day. So, what are the safety net? I'm going to look at that as we go along in a bit. So, that's one reason why people lose money in the financial market. They want to get rich quick, but there is the steady, consistent growth in the market, which is what we encourage, and which is what I'm encouraging in this series. So, that's one of the reasons why people lose money in the financial market. Now, the second reason why we lose money in the financial market is lack of adequate information. Lack of adequate information is also related to the first one. When somebody doesn't have adequate knowledge, he just works with shallow knowledge because he or she has gone to download some videos on YouTube, which fuels that desire to get rich quick. The tendency to blow up one's account is there. Because the truth is, somebody who has valuable knowledge will not just put it on YouTube free of charge. When you know that that knowledge is going to give people money, you're going to have to sell it for at a fee. So yes, we're not saying that you can't start your trading journey from YouTube, but don't think that you are an expert because you watch some videos on YouTube. You must get training, or you should get training. So that's one reason why many people make mistakes, because they just have shallow knowledge of the instrument and then they start trading and then they blow up their account. So if you're going to succeed in any of this, the financial market, like we have mentioned, in any business at all, there's a place for adequate training. That's one reason why many people who have had challenges, they didn't have adequate training. Okay, so the third reason why people lose money in the financial market is overusage of leverage. Now, one thing leverage does for you in the financial market is that it gives you more room for profit. But when you overuse it, also when the market condition goes against you, it also increases your risks. Now, whether you overuse it or not, as you expose yourself to leverage, you also expose yourself to risk. So the higher the leverage, the higher the risk. Now, stemming from the first point that we talked about, that people want to get rich quick, now they use so much of leverage. For example, you have $100 in your account and then you're entering a trade of $5,000. By the agreement before your broker gives you that loan or leverage, it is said that there's something called liquidation point. So once the trade gets to that particular point, the broker is permitted to sell off the asset and then ensure that the money loaned to you is not tampered with. Okay, let me use crypto for example. Let's say in the crypto world, you buy coins. Now let's assume you have a coin worth $100 and you have $100 in your account. Now you project that the coin is going to grow from $100 to $110. Now, if you buy that coin with just the money in your account, you can only make $10 on that trade. But your broker can give you leverage of 1:10. In other words, borrowing you an extra $900. So instead of buying one of that coin, you can buy 10 of that coin. In other words, you're entering the trade with $1,000. So if the trade goes in your direction, the coin goes from $100 to $110. That means you're making extra $100. In other words, for each of the 10 coin you buy, $10 in each of them. So that's $100. Then you close the trade. You sell at $110 per coin. That means times 10, you have $1,100. So you pay back your broker the $900 borrowed, and then you have $200 to yourself. So by leverage, you're able to double, like I mentioned, it's possible to double or even triple your portfolio in just one trade. But on the other hand, because you're buying on a margin, if the coin instead of going to $110, it goes down to $90, or it go down to even as much as $80, depending on the market condition. Now you give your broker the right to sell the moment the $100 you entered the trade in is exhausted, can no longer hold the trade. In other words, since what the broker gave to you is $900, the moment the value of those coins get to that $900 mark, the broker is permitted to sell so that the fund of the broker is not tampered with. So that's why when people take leverage, like I said, it gives you increased opportunity to make profit, but of course the risk is always there. Now, instead of taking a leverage of, let's say, 1:10, now somebody who wants to grow consistently can choose to take, you take a leverage of 1:5 or 1:2 or 1:3. So instead of targeting to try to double the account in one day, you want to grow consistently. So if you take an extra $200 from a broker, then you buy a coin, let's say you buy only three, so you're borrowing just two coins. So those three can have to go as far as about $65 or $67 before you're taking off the market. Yes, at the end of the day, where it goes in your direction, all what you can make is about $30, but you can see that the tendency for it to go that low is very, very rare. So like I mentioned earlier, that when you have a long-term plan and they want to grow consistently, you make more money over time, and then you also secure your capital. So that's one reason why many people lose money in the financial market. They use over leverage, they leverage so much, and then they have things messed up. Of course, we're going to look at this. I'm going to give you more information on how you can get around this in detail for those persons who might want to consider to get involved in the financial market. So these three things are very key reasons why many people lose money. And of course, the fourth one, many people give money to people to invest for them. Now, I've looked at this more for people who invest by themselves. Now, you know, I'll say, what about those who invest for themselves? Because most of these things also apply to them. And then there's also that other aspect, over pressure, which to an extent steams a lot of these things. For example, if somebody has to give you 30% in a month, that's more like the average that investment that we've seen. Some person do 20%, and then the person have to open an office, have staff, pay for the office space, run the office. That means the person would be targeting to earn at least 50 to 60% or more. So there's a place of over pressure when you have to give somebody your money to trade for you. There's a place of over pressure because the person will be working to meeting the agreement that he or she enters with you. So that's one reason why most of this company folded, because they were so pressured based on the agreement they already have. But whatever happens, your client doesn't want to know. All it is that there's an agreement to remit either 15, 20, or 30%, like some company were doing, and then over time they'll mess up. So that's one reason why people also have lost money in the financial market. You want to say, okay, so what is or what are the solution? The video training program continues with how to make safe and consistent income from the financial market, part 2. We had to cut the video here to ensure that you get it in small bits. In the part 2, we'll be looking at the other aspect of the area of focus we've not covered. So far, we've looked at why people lose money in the financial market. So in the part 2, we'll be starting with solutions to that challenge of loss of funds, how you can guide against loss of funds in the financial market. And then we'll also be looking at how to grow your wealth exponentially by compound interest. And then we'll talk about the other areas of focus that we've not looked at now. We had to take more time to look at this one, why people lose money in the financial market, but the other points highlighted won't take so much of time. Actually, part 2 of the training program is less than 20 minutes duration. So every other area of focus is covered in the part 2. So it's something that you can get in a short while. So I want to say thank you for staying with us up to this point of the training. And we hope to see you in the part 2 of the program.